Three semiconductor stocks that I believe are currently on sale and present amazing opportunities for long-term investors. But before we dive in, I just want to say happy Thanksgiving to those that celebrate it. Hope everybody's having a great time with the family. Hope everybody got plenty of food yesterday, and now it's time for the leftovers for the next few days. And like I mentioned, today's episode, I want to look at three semiconductor companies that I believe are sitting at amazing prices. I'm personally buying all three, and they're really focusing in tailwinds from the AI space, but their core markets are also pretty bullish in my opinion. Unfortunately, though, the reason these three stocks are in great buying opportunities is because there is a lot of short-term headwinds, but I believe these headwinds are more just noise compared to their overall potential for long-term investors. So let's dive in and try to understand why I'm bullish. But first, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for special offer at fool.com/Jose and a special link to my semiconductor ebook that's 50% off, no coupon code needed, due to Black Friday sale. So check that out in the pinned comments.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, first is Lam Research, and it's been in my portfolio for about a month or two, and it's one I will gladly continue to add to until it becomes a big portion of my overall portfolio. First is try to understand why I'm bullish on Lam. The equipment space has, unfortunately though, taken a hit right now because the market, the semiconductor space, is turning slower than expected. But in long terms, you have numerous tailwinds like new fabs globally, new manufacturing process, and the future bounce in consumer products. Beyond that, they have strong equipment dominance in memory manufacturing with customers like Samsung, SK Hynix, and Micron Technology. They're seeing massive growth in advanced packaging for AI chips. According to their earnings call, the CEO revealed that their Sabre 3D revenue has more than doubled this year. And this is significant because this is their flagship technology for advanced packaging, critical for AI chips. If you guys know me, I talk about NVIDIA almost on a daily basis, and one of the biggest constraints for AI chips is advanced packaging. So solutions here from Lam Research can definitely help that market, and we can definitely see a nice amount of tailwind in that space. What's particularly exciting is their position in the HBM market as well. For those not familiar, HBM is memory that is essential for AI applications, and Lam is a key enabler here. The company noted that their expectations that HBM will represent 20 to 25% of total DRAM wafer capacity next year, despite only being 6 to 7% of total bit supply. This indicates the huge amount of DRAM that you need to create an equivalent amount of memory in HBM. So this is massive value and the complexity of HBM manufacturing. They're also making progress in emerging technologies. They announced their selective etch tools are gaining ground with major foundry logic customers. Their CEO mentioned significant market share gains in 2024 and strong momentum as they look ahead into 2025. Outside of the memory market, the growth and opportunities in things like gate-all-around, which is the new way next-gen chips will be manufactured, is causing a strong headwind for equipment companies. Now there's obviously the bearish case. Like I mentioned, right now is the market is turning slower than expected. Second, we are seeing China exposure is significant, and they expect revenue from this region to normalize to around 30%. So also the uncertainty of any kind of export restrictions is causing a lot of uncertainties for the company. However, I believe their technology, moats, and critical position in memory manufacturing provide significant protection. Next, we're going to take a closer look at my second biggest position in my portfolio, AMD. And AMD is one that I've entered in the single digits and gladly own and continue to own, and I believe is sitting at attractive prices right now. AMD's story is becoming increasingly compelling. Let's look at their latest numbers. Data center segment revenue increased 122% to $3.5 billion. But here's what really excites me. Their data center GPU business is now expected to exceed $5 billion in 2024, up dramatically from their initial $2 billion forecast. While this gets compared to NVIDIA a lot, I don't see that as my bullish case. To be honest, I don't think NVIDIA right now has any competitors. The only competitors to NVIDIA, it's NVIDIA itself. But because of the current supply constraint market, even number 2, number 3, number 4, number 5 can win. And we can see that with AMD continue to exceed their data center GPU expectations. More importantly, the expectation for this company is low. I'm pretty sure because I put AMD here instead of NVIDIA, so many people are going to get hate saying that AMD is not going anywhere. And I believe the opposite is true for NVIDIA right now. If I would have posted NVIDIA, everybody would have been super excited. And that's because market expectations. The market expects a lot from NVIDIA. And unfortunately, for those reasons, even when they beat earnings, the stock price doesn't do much. But the market is not expecting much from AMD. So even if they outperform, the stock can definitely see some strong momentum in the long term of things. CEO Lisa Su provided some specific customer wins that validate their AI strategy. For example, Microsoft is using MI300X for multiple Copilot services powered by GPT-4. And we know Microsoft is a huge AI player. Meta has optimized the MI300X for their inference infrastructure, including exclusive use for their Llama 405B frontier model. Their ROCm software stack now supports over 1 million models out of the box. Again, I'm not saying this is the next NVIDIA. I don't see this as a trillion-dollar company right now, but I definitely believe that this can outperform the market dramatically. Their client segment grew 29% year over year, showing strength beyond just AI. In commercial PCs, they're gaining tractions with major enterprises and continue to take market share from Intel in both the client market and the server CPU space. Their competitive landscape is fierce, particularly, like I mentioned, with NVIDIA in AI. However, AMD's diversification across data centers, client computing, and embedded segments provide multiple growth vectors. The third stock I'm going to take a closer look at is On Semiconductor, and this is one that just recently entered my portfolio. So On strategy is in power solutions. It's particularly interesting given the AI boom. Their CEO highlighted that power requirements in data center racks are scaling from 40 kilowatts to 120 kilowatts, significantly expanding their addressable market. Now, these are the 3 reasons I'm super excited about On Semiconductor. First, like I mentioned, data center power. Market expected to double from 2.2 billion in 2024 to 4.4 billion by 2028 for those reasons that I mentioned, the increased power needed per rack. Number 2, and I would say this is probably my favorite reasons, is the electrical vehicle market ahead. They're achieving strong growth in China, but overall the EV market is growing globally. The transformation and the electrification, in my opinion, is a major tailwind. Finally is industrial applications. Growing presence in utility scale solar and aerospace defense, and with the potential tailwind of things like humanoid robotics, this can definitely be a strong driver with multiple growth vectors. Their silicon carbide technology is particularly promising. They're showing great yields and they're moving and innovating at great levels. The near-term headwinds are significant though. Automotive and industrial markets, which are their biggest opportunities and their core products, are showing softness. And obviously with macroeconomics rates pretty high, no one is out there buying vehicles. But again, we're still in the early innings of EV, and I believe that is a huge market opportunity. The second thing is, with all this, the company is only trading at forward PE of 16.21. So much of this weakness appears to be priced in. Now, why am I buying these stocks now? Well, first, look at the valuations. All 3 companies are trading at relatively modest forward PE ratios compared to many other tech stocks. But more importantly, they're all positioned in critical growth areas of the semiconductor industry. It's not just that they're valued at great prices right now. What I believe is they're valued at great prices where the market is not expecting much from them, but there's a lot of tailwinds that could help out these companies. Lam Research is essential for memory and advanced packaging, which are crucial for AI developments. AMD is making significant inroads in the AI market with real deployments at major tech companies. On Semiconductor is positioned to benefit from the increased power requirements of AI data centers and the ongoing electrification trend. Now here's my strategy. I'm heavy dollar cost averaging into all three positions. In forms of buying, I believe all three are equally. AMD is already my number 2 position. Lam Research and On Semiconductor have ways ahead, and I still want to add more and more. I view these current prices as opportunities to build long-term position in companies that are essential to the AI and semiconductor ecosystem. So that's it for today's episode. Remember, these are just my thoughts and analysis. Always do your own research before making any investment decision. If you found this helpful, don't forget to hit the thumbs up, subscribe button, and check out the pinned comment for a lot of special